Money is one of humanity's most profound inventions, a silent yet powerful tool that has shaped civilizations, powered economies, and influenced every aspect of life for thousands of years. The story of money begins long before coins clinked in purses or paper notes fluttered between hands. In the earliest days of human society, before cities and kings, people lived in small, close-knit communities. These societies had no need for money as we know it today. They relied on a system called barter, where goods and services were exchanged directly. A farmer might trade grain for a pot made by a craftsman, or a hunter might swap animal skins for stone tools. While barter worked in small groups, it had limitations. If the potter didn't want grain or the hunter had no need for stone tools, a trade could not take place. This problem, known as the coincidence of wants, meant that people began searching for a more universal method of exchange, something that could act as a common language of trade. Over time, societies began to use commodity money, items that had intrinsic value, as a means of payment. Different cultures adopted different commodities depending on their environment and needs. In some places, salt was so valuable for preserving food that it became a medium of exchange. In fact, the word salary comes from the Latin salarium, a payment in salt given to Roman soldiers. In other regions, cattle were considered wealth, leading to the term pecuniary, from the Latin pecus, meaning cattle. Shells, particularly the cowrie shell, became one of the most widely used forms of money in Africa, Asia, and the Pacific Islands. Gold and silver, admired for their rarity, durability, and beauty, also began to take on a special role in trade. These commodities solved the problem of barter by providing a standard that everyone agreed had value. But they also had drawbacks. Carrying sacks of salt or herds of cattle was cumbersome, and gold and silver needed to be weighed and tested for purity with each transaction. The breakthrough came with the invention of coinage around 600 BCE in the Kingdom of Lydia, in what is now Western Turkey. The Lydians used electrum, a natural alloy of gold and silver, to create small, standardized pieces stamped with official designs. These coins were revolutionary because they represented a set value and could be trusted without weighing or testing each time. Coinage spread quickly through the Greek world, where city-states minted their own coins bearing symbols of their culture. Athens had its famous owl coins, Corinth had the Pegasus, and so on. Coins made trade faster, easier, and more secure, fueling economic growth and connecting distant markets. The Persians under King Darius standardized coinage across their vast empire, while the Romans took it to new heights, issuing coins in gold, silver, and bronze, all bearing the image of the emperor as a symbol of state authority. For centuries, coins remained the dominant form of money, but as trade expanded and kingdoms grew wealthier, the need for a lighter, more flexible system emerged. In China during the Tang Dynasty, around the 7th century, merchants began using promissory notes and jiaozi, the world's first paper money. These notes represented a promise to pay in metal coins stored safely elsewhere. The idea spread slowly westward along the Silk Road, and by the time of the Yuan dynasty in the 13th century, the Mongols under Kublai Khan issued official government-backed paper currency. Marco Polo, the Venetian traveler, wrote in astonishment about this system, describing how the emperor's authority alone gave value to pieces of mulberry bark stamped with a seal. Paper money was far easier to transport than heavy coins, but it required trust in the issuer, a trust that could be lost if governments printed too much, leading to inflation and collapse. In medieval Europe, banking systems began to develop, with merchants in Italy creating bills of exchange, a kind of early check that allowed traders to move large sums without carrying actual coins. Goldsmiths in England, who stored precious metals for wealthy clients, began issuing receipts that could be traded, laying the foundation for modern banknotes. In 1694, the Bank of England was founded and began issuing paper notes that were guaranteed by the state. This model spread throughout Europe and the world, with central banks becoming the primary issuers of currency. Over time, the value of money shifted from being directly tied to precious metals, the gold standard, to being based on trust in a nation's economic stability, a system we call fiat money. The 19th and 20th centuries saw massive changes in how money functioned. The Industrial Revolution created new forms of wealth and new needs for payment systems. Checks became common for large transactions, and the development of telegraphs and later computers allowed banks to transfer funds electronically. Credit cards, first introduced in the mid-20th century, transformed consumer spending by allowing people to borrow money instantly for purchases, to be repaid later. Plastic replaced paper for many transactions, and financial institutions created vast global networks to process payments in seconds. The late 20th and early 21st centuries brought another revolution: digital money. Online banking, e-commerce, and mobile payment apps like PayPal, Alipay, and Apple Pay made it possible to transfer funds with a few taps on a screen. Cryptocurrencies, led by Bitcoin in 2009, introduced a radical new concept. Money that exists only in digital form is not controlled by any government and relies on blockchain technology to secure transactions. Bitcoin was followed by thousands of other cryptocurrencies, sparking debates about the future of money, its regulation, and its stability. Central banks are now exploring central bank digital currencies, CBDCs, as a way to combine the efficiency of digital payments with the security of government-backed currency. Throughout its history, money has been more than just a medium of exchange. It has been a measure of value, a store of wealth, and a symbol of trust. It has funded wars and built empires, created fortunes and fueled dreams. From the humble barter to the invisible transactions of the digital age, money has continually evolved to meet the needs of human society. The story of money is, in many ways, the story of civilization itself, a reflection of our ingenuity, our ambitions, and our belief in shared systems of value. As technology advances, we can only imagine what the next chapter will bring. Perhaps programmable currencies, global digital standards, or entirely new concepts that we cannot yet envision. But one thing is certain: money, in whatever form it takes, will remain at the heart of human life, shaping the way we work, trade, and connect with one another.